What is going on, ladies and gentlemen? In this video, I'm going to be rating setups A+ through C. I'm going to be doing this based off the guide I made. If you have not checked out my guide, it's completely free. You can click the link in the description below and you can get that guide on my WAP. It's completely free. Like I said, no strings attached. You just got to sign up. And once you get that guide, you can kind of read it and then you can understand why I'm rating the setups I'm rating in this video. So I'm going to start off with an A+ setup. Okay, so an A+ setup typically has one main thing. Okay, an A+ setup is usually a sweep of a liquidity pool, and we're delivering or bouncing from some sort of fair value gap as well. And a lot of times it's usually in the discount of the range. So an example of a good A+ setup would be something like this, where we have a bearish inversion, we get the entry here, and then you target the highs. Okay, now the reason I like this is because in this specific example, okay, the range of this leg is drawn like this. Okay, this is where the impulse starts and then this is where it ends. Okay, and not only do we deliver or bounce from another fair value gap right here, you can see that we also sweep this liquidity pool right here, making it A+. Okay, and it's a singular fair value gap. It's obvious. It's very clear. It's in this kind of the range. We have a nice target above. I like how there's actually two highs here. I like how these are a little like engineered, you know, see how there's like one high after the next. So that makes it a good play too. So that would be an example of an A+ setup. So here is going to be an example of an A setup. So in this example here, we don't really sweep a major liquidity pool, but we do deliver off this fair value gap. And usually an A setup will typically still be kind of lower in the range. You can kind of see in this range here, it was, I mean, relatively, it wasn't super low, but it was still not at the top of the range. So if I kind of draw a discount on premium here, you can kind of see this was a little higher in the range, but I do like how we delivered from the low of the range, right? We did tap discount in here, making this okay, especially when we had these kind of equal highs up here. Okay, we had perfect equal highs up here. So there's still an obvious target. There's still a delivery off a fair value gap. We're actually coming off another inversion, but the only reason I want to give this A+ is because we're not really sweeping major liquidity pool off this specific leg. Now, I will argue we swept the major liquidity pool here, but we're not really in discount as well, so it's just not A+, because if we got a setup here, that would have been A+, right? If there's a lower time frame setup here, I bet you that's the A+ setup. So I would just give this an A setup, but overall, still a really good setup. Now, if you're wondering where to enter, you would have entered in this candle close, stop below it, and you would have targeted this high, and then you would have targeted any high to the left. I'm not sure. I'm not going to go to the left and look for a target, but that's basically what you do. So an A- setup is actually still not a terrible setup. An A- setup usually is the same as a B+, but B+ is just going to be on horrible price action days. A- is going to be on decent price action days. I would give this probably B+, but if this was better price action and less choppy, it would definitely be A-. And the reason I like this trade is we kind of swept this internal high, not much displacement over it. We got a very obvious fair value gap, displaces through nicely, and I would still give this a B+, and it still kind of goes along with the bias here. So this was actually a day I was bearish to this low, and I was still bearish here. But the only reason why it's not A or A+ is because it's kind of low in the range. This will work sometimes. Maybe there's an SMT here, maybe not. That would make it more high probability. Like, it will work sometimes, but other times you're just going to get wrecked. So I would give this a B+/A-. On good price action days, A-. Bad price action days, B+, just because of how low it is in the range. But it still has that like singular obvious fair value gap to it. So it's still pretty good in my opinion. And you will see these setups work. They just don't have an 80% win rate. I would say more like 60-70% win rate. So the next setup I want to go over is a B setup. So a B setup typically occurs during chop, but it definitely can still go along with a bias. It's not really at the middle. It's not really at the high of the range. It's not really at the lower range. It's just kind of in the middle of chop typically. And it's still kind of an obvious gap, and it still goes along with a bias. But sometimes they're just maybe a little too small, and it's just too choppy to take them. So this is a great example of a B setup. We got a really nice candle close. It was an all right. It was kind of all right, like it's kind of obvious, but it's not like the most obvious in the world. And it definitely does go along with a bias, and we kind of had these relative equal lows on here, so that was kind of a bias. and you can just kind of see it ends up failing. But it fails because it's kind of just choppy. And again, it's not a bad setup. Like, these will work, but they're definitely only have a 50% win rate, right? The A+ ones are going to be super obvious, super clear. There's not going to be chop. They're going to occur probably higher in the range. They're probably going to occur somewhere here. And this is just a B setup because it's in the middle of chop. It doesn't really, the market's not, doesn't really care about something like this in the middle of chop is what I'm trying to say. So that would be an example of a B setup. A B- setup is a much less obvious fair value gap. A B- setup would be something like, a B- setup would be something like this. It's not obvious. We are sweeping this low. We are coming out fair value gap, but it's just not obvious. It's way too high in the range. We don't really have good liquidity to target. If you look to the left here, you don't have any equal highs. You don't have any low resistance liquidity. We already kind of ran these smooth highs or these engineered highs. There's not really any good target left in sight. The gap just isn't obvious. It doesn't stand out. We're very high in the range. It's a B- setup because of all those things. And it's kind of occurring during chop as well. I mean, I feel like this is definitely a little choppy. So that's definitely more of a B- setup. And it doesn't really go along with bias either. B- setup is just like a random fair value gap. Doesn't really go along with bias. And last but not least, we have a C setup. So a C setup is just completely not obvious. It doesn't really go along with anything. It's just a random tiny fair value gap. There's no liquidity sweep here. There's no delivery out of a fair value gap. There's no nothing. It's just during chop. I would say we are rejecting this fair value gap, but it would honestly be better if, I mean, this was already filled the first time, so I wouldn't consider this truly delivering out of one per se. But it's a random fair value gap. There's no correlation to it. There's no meaning to it. There's no anything to it. This one, you're going for a low that already took out a low here. It just has no correlation to anything that's going on in the market, and it's tiny. And these work probably 30% of the time. Don't take them. They're not obvious. It's just these are the ones that occur during bad price action, chop, and just they don't have anything to do with what the market's going to do. So that's more of a C setup. And also, this was way too low as well. The C setups will be real, like at the shorts will be really low in the range, the longs will be really high in the range. Just don't trust these, trust me. So that's going to be it for this video. That's going to be it for the rating. What I want you to do is I want you to click the PDF. The link is in the description. You can go over them more in depth and see a few more examples, and you can backtest them yourself on FxReplay, which if you use code DODGY15, you'll get a 15% discount. Do not forget to use code DODGY. I would definitely suggest forward testing these as well, live testing them. Just buy a $50,000 account, like $30 right now if you use my code. And what happens is it's a paper account, but there's still kind of emotions attached because you're still paying for it. And it's better than a live account because if you lose $30 or if you lose $2,000 on it and blow the account, you're only losing $30. So you're not actually losing the money. Okay, if that makes sense. If you're on a live account, you're losing $2,000. You're down $2,000. You're right. You can't change that. So definitely would recommend using Apex. Very good prop firm. They are actually improving a lot. They were at a slump for a little bit, but a lot of new emails they're definitely improving faster payouts, faster everything. So would definitely go check them out. Again, link in the description for that. So that's going to be it for this video. Let me know if you got to the end of this video. Just comment the word line. I want to see who's a real one. Doubt more than like 30% of people got here anyways. And that's going to be it for the end of the video. I will see you in the next one. Peace.